You felt it before. That moment when someone mentions a Roth IRA, or a credit utilization ratio, or compound interest, and you nod like you know exactly what they're talking about. You don't, and neither did I. Here's the truth. You were never supposed to. Nearly half of American adults cannot cover a $400 emergency without borrowing money or selling something. Half. And the answer we keep getting handed. Try harder, spend less, read a book. As if the problem is you. It's not. The problem is a system that handed you a credit card at 18 and called it financial education. But here's what nobody is talking about. And I'm going to save this for the end of this video because once you see it, you cannot unsee it. There is a reason the financial literacy gap exists. It didn't happen by accident. And by the time this video is over, you're going to know exactly who built it, who profits from it, and what it would actually take to tear it down. Stay with me. So let's talk about why the old explanation doesn't hold up. The story we've been told goes something like this. Financial success is a personal responsibility. You either figure it out or you don't. The information is out there. No excuses. That story sounds reasonable. It's also wrong. And here's why. The financial system most of us navigate every day. Credit scores, interest rates, retirement accounts, insurance products was not designed to be simple. It took decades to build. It took armies of specialists to design. It operates on layers of legal language, actuarial tables, and compounding variables that even professionals spend careers mastering. And then, we hand 18-year-olds a credit card application and wish them luck. The question has never been why people struggle with money. The question is, why did we ever expect them not to? Here's what we're going to cover. Why financial education was never actually taught in American schools. How the literacy gap follows a very specific, very deliberate pattern. What happened when pensions disappeared and left workers holding the bag? Who profits when people stay financially confused? And the one thing that actually changes this, which I'll get to at the end. Let's go. Personal finance was never a serious priority in American public education. Not really. What little instruction existed was buried inside home economics or math classes, inconsistently taught, rarely updated, and almost never connected to how the financial world actually works today. Today, only about half of U.S. states require any personal finance coursework to graduate high school. Half. Think about what that means in practice. You could graduate from a public high school in America, get your diploma, walk across that stage, having never learned what an interest rate actually does to a loan over time, never learned how a credit score is calculated or why it matters, never learned the difference between a traditional IRA and a Roth, and then 6 months later, you're expected to make those exact decisions. But here's the part that really matters. And this is where it stops being just a policy problem and starts being something else entirely. The schools least likely to offer strong financial education are the same schools serving the communities that need it most. Low-income districts, under-resourced, underfunded. Their graduates walk into the exact same financial system as everyone else, but without the map. And it turns out that's not a coincidence, because the literacy gap doesn't fall randomly. It follows a pattern, and that pattern is going to make you uncomfortable. The financial literacy gap in America tracks closely, almost perfectly, with race, income, and zip code. This is not a coincidence. It's a pattern. and patterns don't emerge by accident. Here's how it actually works. Wealthier families pass down financial knowledge the way they pass down everything else, through conversation, through modeling, and through the safety net of being able to make a mistake without it becoming a crisis. If your parents owned a home, invested in the stock market, talked openly about money at the dinner table, you absorbed lessons that never showed up in any curriculum. You didn't even realize you were learning. You just knew things because you'd heard them your whole life. If they didn't, you were largely on your own. And here's the part that should make you genuinely angry. The financial industry hasn't exactly rushed in to fill that gap out of goodwill. Payday lenders, overdraft fees, rent-to-own schemes, predatory credit products designed to look like a lifeline. These don't flourish in communities full of financially informed consumers. They flourish precisely where financial education is absent. The gap isn't just a failure of schools. For some, it's a business model. If this is hitting home, if you've felt this in your own life or watched someone you love navigate this, hit that like button right now, subscribe so you don't miss the rest of this series, and share this with someone who needs to hear it. The more people understand this system, the harder it becomes to exploit. All right, let's keep going, because it gets deeper. For most of the 20th century, American workers didn't need to be investment experts to retire with dignity. Pensions handled that. Your employer, in exchange for your years of work, promised you a defined monthly income in retirement. You showed up. They managed the money. Simple. Then, quietly, that changed. Over the last few decades, pensions were systematically replaced, largely by 401k plans that shifted the entire burden of retirement planning onto individual workers. Suddenly, ordinary people were expected to understand contribution rates, investment allocations, employer matching, tax implications, vesting schedules, with little to no financial education and no guarantee of a safety net if they got it wrong. The responsibility shifted. The education never followed. So we've got a broken education system, a gap that follows race and income like a shadow, and a retirement system that quietly handed workers a problem they were never trained to solve. Which raises the obvious question: who actually benefits from all of this? That answer is coming. And it's the piece I promised you at the top. This is not a channel about budgeting hacks or the best savings apps. There are plenty of those, and they're fine, but they're not asking the harder question. The harder question is, why does the gap exist in the first place? Over this series, we're going to dig into the history of financial education in American schools, the mechanics of predatory lending, how it's designed, who it targets, and how it legally extracts wealth from communities, the racial wealth gap, and the policy decisions that built it, what a handful of states are actually doing right, and what the rest of us can learn from them. We'll look at the people who benefit when financial confusion is the norm, and we'll look at who pays the price. The goal of this series is not to make you feel helpless. It's to make you feel informed, because understanding the system is the first step to navigating it, and eventually, demanding something better from it. Okay, I promised you something at the top of this video. I told you there's a reason the financial literacy gap exists, and that it didn't happen by accident. Here it is. Financially confused consumers are more profitable. They pay more in interest because they don't fully understand how rates compound. They pay more in fees because they don't know what to look for in the fine print. They take out loans they can't afford because the alternative wasn't explained to them. They don't invest because the market feels like a foreign country. And on the other side of every one of those transactions, someone is collecting. Payday lenders collect. Banks with predatory overdraft structures collect. Subprime mortgage lenders collected until the whole thing collapsed and took the economy with it. This is not a conspiracy theory. It's a business model, documented, studied, and in many cases, perfectly legal. The financial literacy gap persists, not just because education failed, but because for certain industries, that failure is worth protecting. You didn't fail a class you were never taught, but now you know why the class was never offered. And knowing that, actually knowing it, changes how you move through this system. Now, here's what happens next. Once you understand that the system wasn't built for you, the natural question is, how do you build wealth inside a system designed to extract it? That's exactly what we're getting into in the next episode. We're breaking down predatory lending from the inside out, how it works, how it's marketed, and what the actual cost looks like over the lifetime of a loan. Numbers that the fine print was designed to hide. Click that next video. Because the information in it isn't just eye-opening. It's the kind of thing that can save you thousands of dollars and years of financial stress. It's right there. Don't wait.